Okay, geht los.
Möchte ich euch heute zeigen, dass ein jeder Weg steinig und vor allen Dingen scheiße kompliziert sein kann. Macht dieser Satz Sinn? Ich begann mein Geld anzulegen und arbeitete fleißig weiter. Doch brachte mich das meinem Ziel näher? Durch meine negative Erfahrung ist es mir auch in Zukunft wichtig, finanziell richtig abgesichert zu sein.
Hello, everybody. We thought we'd just kick it off with a little intro video about Visual Vest. You've probably not heard about Visual Vest yet. Visual Vest is a startup in the fintech industry, a so-called robo advisor. My name is Katja. I'm part of the project team since the kickoff, January 2015. I'm advising them, and I'd like to introduce Alex to you, who is part of the Visual Vest team.
Yes, hello, my name is Alexander del Toro Barba. I'm a head of product and marketing. I'm working with Katja at Visual Vest. Can you switch to the next slide? We're talking today about robo-advisors, maybe just to catch you up a little bit for everybody who is not so clue. What is that? A robo-advisor is like a financial advisor for portfolio management, but with minimal human intervention. So that means that most of the transactions and most of the work is done digitally. We want to talk about how can you differentiate on these markets when you found a startup in this branch. As you can see, can you go back? Sorry. As you can see, there are a number of competitors on the market. The US market is the biggest one. The total asset under management is over 30 billion US dollar. And then you can see in Germany and UK, we have a lot of competitors already. Now you might ask yourself the question, why do you found a startup in an area where you have so much competition already? Well, first, competition is great, because as you can imagine that when you want to invest money in something and you have never even heard about the business model, it's quite difficult. That were the first wave of robo-advisors. Now we have the advantage that since there are more and more robo-advisors, you hear about them in the press, you can read comparisons, and that way you can build trust. And on the other side, with competition, you have a lot of pressure on the market to bring new features, to lower the prices. You can compare that a little bit to the cloud computing market a couple of years ago. When Amazon was still there, people were and companies were still hesitating to invest in cloud. Once Microsoft and Google invested and IBM and more came, the prices went down, more features were available, and trust was built, okay, I can move in the cloud. We have the same thing in a very early stage on a robo-advisor market. So that's why we say competition is amazing, it's great, we are more in the press. But there is one thing that many people ask us, and that's how do you differentiate? When there's so many robo-advisors on the market and the market is in a very early stage, you need to differentiate in a certain way. And this is what we want to talk about today. Can you use it? So we were thinking first from the customer perspective. There's a huge pain, and that pain is not new. For most of the people, financial decisions are difficult because people have normally not so much idea how that works. And they deal with financial issues only as much as necessary. That means that in best way, financial solutions just should work. It's like a car. You don't know how that works in detail. You hope it just works perfectly fine. You have no problem. And it's the same with financial investments. But here's a great difference. In the past, people went to the bank, and the banks had a direct contact to the end customer. The advisor could talk to them, could build trust, could tell them what's going on, and could manage it in the background. When you switch, then you can see now we have a new generation, the so-called millennials. They don't go into banks anymore. They're mobile first. They do everything online. And worse is that they even distrust banks since the financial crisis. So we have actually a double dip. You have more digital, less physical contact, and people don't even want to go in banks because they don't like them. But the main problem still remains that people still have a problem to make the right financial decisions. So, and here comes our possibility how we can go in this market.
So as Alex said, the biggest pain and challenge of a consumer is the complexity of investment. I mean, we have a lot of investors here. You might smile about that, but think about your friends and your family and people you know who are not experts in this area. It is a complex topic, not only out of the nature, understanding it, it's a complex decision. People worked hard for their money, so they don't want to lose it. So you have to have trust to the company you're giving the money to.
Yes.
That is why Visual West decided not only to found with the experts in the industry, with the financial experts, but to build a great team also out of experts in the finance industry and digital experts. So there are people like Alex or myself, for instance, who challenge the financial experts because we seek to understand how the product works, what are the chances, what are the risks, because we need to explain it to the consumer to build up trust in the market and to help them making their decision.
Okay, build on these Scrum processes that we have set up. We were thinking first, before you address that with marketing issues, you need to have a product that at least catches up on what's existing in the market, and in certain ways also to leapfrog the features that are already existing. Obviously, in the first phase, that's not possible to come up with something completely new when you're in such an early market. So we were thinking, what can we do that differentiates at least a little bit from those who are existing? So one is independence. We can choose from over 13,000 funds. This is connected to the last one, security. We are a startup from Union Investment. It's one of the largest fund trusts in Germany, so we have access to a number of funds that most robo-advisors that are new in the market simply don't have, at least not for cheap money. We also decided to bring more diversity. Most robo-advisors only offer ETFs. They're cheaper, they're easier, but there's still a number of people who prefer actively managed funds. And that's why we decided we want to bring that in as well as a choice. We still have in default always the ETFs, but you can toggle always in our interface, switch to actively managed funds. Then the depth, most robo-advisors have only 3 risk types. We created 7 so that we go a little bit more, we offer more granulation for the investors. And we have the prediction engine. This is something not so sophisticated as many of our competitors have. It shows like how does it work. Here we are thinking how can we go in the next phase to make that even more modern. Okay, next. So after we have set up the product that is live now, we have also thought how do we address to the younger generation. What we notice is that many robo-advisors, since in most of them, not all, but most of them are financial experts behind and know digital. The solutions look like blue and white, like old bank websites. And that's not what the younger generations is used to. So we use a lot of colors. We used mobile first. We used short text and videos to explain the very difficult issue. And one thing, that's something very high recommendable. Many bank managers, they have an iPhone. So that's why they think our first app will be an iPhone. But if you look at the market, especially when you go abroad to the younger generation, there's a higher chance that they have an Android phone. So we also decided that we bring an Android app out so that we have a broad communication to the younger generation, a strong product in the background, but in front and very easy and very familiar interface like they're used in Spotify, for example.
So the biggest challenge, as you can imagine, for Visual West was how to market the product, how to market, as for every startup, I mean, how to spread the word. Nobody knew about it, and compared to a car or a phone, you cannot touch the product. Compared to a software or a cloud product, there is no trial. So you just basically have to trust that this company is responsibly taking care of your money and your investment, and ideally grows your savings. So what we did before the launch of Visual West is we started a pre-sales campaign called a different domain, and it was basically, you could, for example, buy or calculate how much a flight to the moon would cost you, or how much the Death Star would cost you. And then we did show you the average interest rates you would get by your saving accounts or while investing in actively managed funds or ETFs. That to educate while entertain as well, because I mean, honestly, in the consumer area, who wants to see a boring slide or boring information just about how it works? So we try to entertain, to make it viral, but as well to share knowledge and to educate. And that's what Visual West does since the launch of the product, very much focusing on social media campaigns and influencer marketing. Since, of course, influencers and social media stars, as the guy you've seen at the very beginning, his name is Cheng Löw. He has more than 1 million YouTube followers in Germany nowadays. So the millennials of today listen to what he has to say. And those people writing blogs and looking at the solution of Visual West, they don't only have positive feedback, they have very critical feedback as well. But taking that into consideration, we did start with a collaborative marketing platform with TRND at the very launch of the company at early March, and a lot of the feedback has already taken into the product team, and there was a price change, and so we take the feedback as it's the potential customers' feedback, take it serious, and work on our product. And we believe in that approach because, end of day, if you have a question about how to invest, the people you'd ask is your family, your friends, people you trust, like influencers. And that's why we approached it that way. I think since we've already seen the video, we skip it for now and move on.
Family insurance brokers, banks, and even the news media increasingly advise us to put money aside every month. And there are good reasons to do this. Saving for your retirement, fulfilling your dreams, or financing major purchases. But it's important to make sure that low interest rates don't cause your hard-earned money to lose value in the long run. Or worse, that a risky investment means you lose all the money at once. But what are your options? Traditional saving options include fixed deposits and instant access savings accounts, giving you quick access to your money, but at very low returns. You might as well just hide your money under your mattress. Investing in the stock market offers higher returns. However, without the necessary knowledge, this form of investment can still be risky. Share prices fluctuate daily, sometimes rising and falling at breakneck speed. And laypeople often don't have the time nor enough knowledge to make an informed decision. Financial magazines and comprehensive internet research notwithstanding, a certain degree of risk remains, because even Wall Street experts aren't immune to unforeseen market fluctuations or outright crashes. But there is a solution to the investor's dilemma. Instead of putting all your money into just one company's shares, you can minimize the risk by diversifying your investment. Since it's relatively difficult to identify the right mix of stocks, funds managed by investment firms are available. These firms pool investors' money and diversify it across a range of shares. If you select a fund that is made up of various shares, your investment is distributed across several shares and you mitigate the risk. Funds also enable you to invest in various kinds of assets, also known as asset classes. As an asset class, equities are...
Okay, thank you very much for that. As you could see, when you normally talk to young customers, when you already start with commodities or bonds, you lose them. They don't understand that. But if you want to talk about investing money and in portfolios, you need to give them a certain background information about what they're investing in. So we try to put that in these little videos, but not too much information, but as much as they need for a first step to understand what they're doing. So the first phase, as you can see, is behind us. We went live in March, but that's just the beginning. You never stop innovating. So we were thinking when we went live now in the first phase, what can we do now? I previously talked a couple of slides ago about these selection from 13,000 funds, ETFs, active, and so on. But let's be honest, at the end of the day, these are technical features. That's not something you can really inspire people to invest. that doesn't mean that they're not necessary. But if I would put my money online, I would guess that this is the minimum requirement that it should match, at least the security and a broad selection. But this is not something you can differentiate anymore in the future. So you need to think, what can you do? You can compare it a little bit to the PC industry. When you talk to somebody, my computer has 128 gigabyte, most customers will say like, okay, well, what is that good for? When you tell them you can save 5,000 movies or you can use Photoshop on it and it works very, very fine. That's something that customers understand. But they still expect that a computer has a very good technical background. And it's the same with the robo-advisors. It needs to work in the background, needs to be independent. But what's for the next phase that we are entering now, a real differentiator?
As Alex outlined, there is these differentiators are understood by experts or by journalists. Visual West has just been rated from Ökotest, which is a German testing magazine, as one of the top-notch robo-advisors, or tested by extra funds. Those people understand these benefits, but a consumer might be confused. Consumers nowadays, we did talk to a lot of potential customers, and what they care about is more and more, where do I invest my money? In which countries? In which industries? What is behind in those funds? And these kind of motives have been a guidance to us, because Visual West cares for those motives as well. More and more people, numbers are growing, people buying organic food or buying fair trade. And believe it or not, but more and more people are as well looking at where to invest their money and where do those companies invest. So they look for sustainable investments. And as of today, 3 months after the launch of Visual West, they launched 3 new portfolios, and it's the first robo-advisor who launches portfolios with only sustainable funds. And in the view of a customer, that is a true differentiator, and end of day, that's what counts, what a consumer looks at as a differentiator.
Okay, as you can see, sustainability is always a very sexy topic, and it's also something that you think it's ethical, it's the right choice. And in that case, the digital experts went and said, we think from the millennial perspective, that is an important issue, but our financial experts, they were working very hard a couple of months to create portfolios that match the same risk and profit criteria as the standard portfolios, so that as a customer, you don't have a worse choice. That was very difficult because there are not so many funds, as you can imagine, but they found combinations. So now, since we finished almost phase 2, what are we doing in phase 3? It's like never stop innovating. So we're thinking the next steps. One big thing is, since for the younger generation, sustainability is important, but also individualization, we need to think, how can we make more tailored recommendations? And here comes a topic that is extremely interesting. This is all if you have maybe heard about that machine learning technologies, it's about the broader keyword artificial intelligence, that we bring that in. And I don't know if you know, but for me, that's a golden marriage, because finance industries and artificial intelligence, they have so many points to overlap, they have so many possibilities to connect from the front end with chatbots, which is where we want to start, that we want to go into a more product recommendation, to the back end where more data are elaborated for a recommendation. Because let's be honest, they call it robo-advisor, but most of those, including ours, are neither really a robo nor a real advisor. It's just a very simple front end that makes it easier to understand. But the portfolios are created still by humans, and there is like a lookup table based on the input data. But if you go in a decision tree, for example, you start a conversation with the customer through a robot and ask, do you have children? If you say yes, then the next question will be another one. And you can start with, for example, our communities. You can save for your children. You can save with friends. That's something competitors at the moment don't have, because it's much more complicated to establish these kind of portfolios. And this is a big advantage. We have Union Invest behind us because they are the experts. They do that for decades already. And the third is, for those who say a robo-advisor is a nice tool because it helps me. It's like a dream weaver. It helps me to start something, to build up a portfolio. But the recommendation I get, I want to elaborate a little bit, because maybe I don't like commodities, or I have a certain portfolio and I don't like this fund, I want to change it with another one. Then you can do that. This is something we will publish during summertime as well. And this brings us far ahead of most of the robo-advisors that exist on the market. And if you go one more, thank you very much. I tried to bring it as easy as possible. If you have 3 areas, you have the front end, the millennial customer, and to say that also most of the customers we have are actually not millennials, but people over 40 that have money and they just say it's convenient. And I like to use it on my phone or my iPad. So let's have this customer in front. He talks to a chatbot, tells them what necessities they have, what risk they would go. And then the real robo-advisor asks them, yeah, hey, do you want to connect to your account data so that I can get more information? You click yes. It takes out all the data. It puts on these machine learning platforms. Copyright, that's a Google Cloud platform in that case. You can use the same way Amazon. You can also put a private hosted cloud. You elaborate all these data, like in the movie Her, in milliseconds. And the financial advisor comes back in milliseconds with a recommendation. I saw all your background from the last 10 years, and here's the recommendation that I can give you that is tailored only for you. And that's something that does not exist on the market yet, and that's what we are working very hard on, that like in this big data wave, there's no categories anymore of customers, but every single customer is its own category based on the data points you have in the background. This is something we work at the moment, for example, together with the German Center for Artificial Intelligence, to bring that for the next phase. Because otherwise, the robo-advisors that are there today, they're a good start to enter the market, to give some insight how online investing works. But this is the 0.1 version of something like this. And now imagine you could bring multi-asset in it. You say, my wife is pregnant, and in 9 months she gets a kid, I need a new car. The robo-advisor will say, okay, let me check your account history. Let's do it like this. You save the next month this amount every month. At the end of the 9 months, you have this capital. I add you this credit, this loan that would be convenient for you. And both together, you can afford yourself in 8.5 months this type of car that is suitable for a family. That's extremely convenient. And this is where we want to go in the future. Thank you very much. I don't know if there is still time for any questions, or if we proceed with the next one. Yes, thank you very much. So if you have any questions so far. Yes.
I looked at your site, it's in German. Are you going to have it in other languages, or are you only going after the German market?
That's a very good question. We have actually internal discussion about that, because we have 2 questions about it. First, nationally, we have a large Turkish, large Russian and other communities, and it will be very convenient for them. So we're working on that. And the internationalization, we're also working on that. And there are like countries like Poland, Netherlands, UK, and the Nordics very close.
Okay, thank you.
Other questions?
Did you ever invest in a robo-advisor? For example, Scalable, I don't know if they're here. I need to say that they're very amazing, but Scalable, I need to say it's not comparable to us. There is a Vermögensverwalter. It's something you need a license, a different type of license, so they can actively manage your fund, your portfolio. But there, for example, in the higher category of robo-advisors, they're really amazing. So did any of you invest already in one of these types of robo-investors? One, okay, it's an early stage. Any other questions? We publish our performance of all our portfolios. As you can imagine, since we have 7 different risk classes, there is a conservative one where you have a 2 to 3%. But that's difficult to say. First, you need to take the time period. If you go back for the last years. If I want to be trustful, I cannot give you a number. I'm sorry, I can tell you between 2 and 8%. Oh, I'm sorry, I didn't hear that again.
We started March, was it March 8? So it's a very, very early stage. So we can look at the history of those portfolios. For the different portfolios we have during the last months, but I need to say we had a very good period on the stock market since March after the very bad January and February time. But we had our portfolio, the minimum portfolio we had 2.5%, and the highest one we had 5% profit. But 3 months, we recommend our people, our customers, to invest at least for 3 years.
If I may, this is not about short-term returns. This is about a change in the marketplace and how investors are going to be investing going forwards. This is a whole new model of where millennials are going to lead investment in the world. And they're not looking for just 2 to 8% return. They're looking for all of the other benefits that you're giving, the values, the sustainability, the change in the world. That's what's going to drive them as much as the 2 to 8% return.
Thank you very much. But this is true, and also that we publish all the figures. You can go back with our portfolios in the last time if you want, but what we don't do is we promise figures, because this is something, there are competitors here right in Berlin, you can read an Ökotest, it's a very good feedback, and they say if you promise interests, that's not, how's the word?
Well, that's not trustworthy.
Yes.
I mean, nobody can predict what's tomorrow. That's why we decided to have portfolios, to have a good average on risk and return. I mean, due to compliance and everything, I mean, we're looking at those that are there, but we are not looking at moving to the markets.
Well, these retirement plans that you mentioned in the US, it's something that we don't have in the same way in Germany. So that's why I know these... yeah. What Germans do like is saving plans. Like over 90% of our customers, and by the way, also most of the customers from Union Investment, behind them are Sparda banks and Volks- and Raiffeisenbanken. Saving plans are extremely popular among Germans, and from a saving perspective it makes a lot of sense. You don't go on the stock market and always care how is the stock market working. You go long term and invest in different periods. But these retirement plans, we don't have that legally in Germany, and we don't plan to go in the US. What we, however, do, we watch the US market. Did that answer your question? No? Maybe that's easier.
No, so my question is that some of the U.S. robo-investors claim that through very rapid trading on losses, you're optimizing your capital gains tax, and the rapidity of the trading is something that they can do in addition to the kind of allocation of investment funds. So they're saying basically we reduce your fees, we automatically allocate and rebalance, and we have a third value prop, which is this rapid fire trading to optimize tax losses. And I just wanted to know if you are basically saying 2 of the 3.
No, we don't do that yet. Oh wait, sorry, I need to go because of the bug. We don't do that yet in that case because that's Vermögensverwalter, that's another license. We are aspiring there, or we're working together with banks to provide that, but we cannot actively manage the portfolios. What we do is we ask people for a rebalancing because we notice that they're getting out of what they originally set up, but we don't do that type of sophisticated management yet, simply because legally we are not allowed. Scalable is more a competitor who does that. Any other questions? Yes.
Hello, my name is Guillaume from France. For you, what is your major business issue in the next 3 years to gain money? Do you think it's monthly subscription, a paying subscription? Do you think it is to distribute financial products? Or do you think it is B2B services to banks or insurance company? What is your major, not all, what do you think you will focus on the next 3 years to gain money?
Well, clearly, number one, the subscription. This market is just about to get started. So it's a lot in the press, but very much in the investors read about it. People who are related to it read about it. But for the consumers, it's a very new model. So I think the next couple of years will tell if consumers adapt to the model or not. So it's clearly the first one, subscriptions, and how to move on. As Alex said, I mean, you don't want to have one portal or one account for every service. I mean, as a consumer, I want to have it a convenient portal where I can manage as many services as possible.
So it's in a way that when you call it subscription, most of our customers use saving plans. They start with 50 or 100 euro just to see how it works. And we tell them at least invest 3 years. That's kind of a subscription. We don't focus so much on product. We have certain different products that need tailored to their lifestyle. Like, for example, if you have kids or you want to save with friends. But we focus on these saving plans for a long term. And regarding the banks, but that cannot leave the room. We are working with banks together because we got requests from banks. They say, this is an amazing solution. You have the infrastructure in place. And this is something that I was reading once from an expert in the US who wrote, robo-advisors is not primarily a business model, it's a technical model. That is a ground base for banking in the future. They start in one specific area with modern infrastructure. Banks adopt that and put then all the rest inside. And hopefully we have at the end something like I showed in the end that everything is digital. You can go to the bank if you want. You can completely do that at home. But that's our long-term plan then, both subscription and working together with banks.
Well, I guess we are running out of time. We are here today and tomorrow all day long, so happy to have any kind of challenging conversations. Thank you very much.